Today is Monday, 27th April 2026, and what I'm about to share did not come from theory, backtesting, or someone else's opinion. It came from live market execution during one of the most unpredictable trading environments I have ever seen. The charts were open, the New York session was approaching, and I had one goal in mind: to test the ICT Silver Bullet Strategy under real pressure and see if it could actually survive when emotions, timing, and liquidity all collide in real time. I had already prepared my chart before the session even started. Previous highs and lows were marked, liquidity zones were highlighted, and I had mapped out the potential silver bullet kill zone where I expected institutional activity to show its hand. But even with all that preparation, there is always a moment of uncertainty when price starts moving live. Because no matter how good your analysis is, the market always has a way of testing your discipline first before it reveals its intention. As the New York session slowly came alive, I started noticing early signs of liquidity building. Price was not trending cleanly. Instead, it was consolidating in a tight range, almost as if it was collecting energy. Equal highs were forming just above current price, and equal lows were sitting beneath it like a magnet waiting to be swept. This was exactly the type of structure ICT concepts warn about, but seeing it form in real time feels completely different than studying it on replay. At this point, I was fully focused, watching every candle form with intention rather than emotion. I reminded myself that the silver bullet window is not about reacting early. It is about waiting for displacement after liquidity is taken. And right when most traders would start forcing entries out of impatience, I stayed still, observing how price was deliberately moving toward a very clean liquidity pocket above the range. Then something changed. The pace of the market shifted slightly. It was subtle but noticeable. Momentum started building toward the upside, and it looked like the exact scenario where retail traders would jump in too early, expecting a breakout. But I stayed aligned with my plan, knowing that the real move in ICT Silver Bullet Strategy often begins after the fake move completes its purpose. And at that moment, I was waiting for confirmation, not prediction, fully documenting everything through Metal Market Insight, as this live test was unfolding in real time. As price continued to push upward, it looked convincing at first glance, almost like a clean breakout was forming above the equal highs. I could already imagine how many retail traders would have entered long positions at that exact moment, believing the move was finally starting. But I had seen this behavior too many times in ICT models to get emotionally involved. Instead, I focused on one thing only: whether this move was actually delivering displacement or just creating liquidity for a reversal. Within a few candles, the real intention of the market started to reveal itself. The push above the highs was not sustained. Instead, price hesitated just long enough to trap late buyers before quickly losing momentum. That hesitation was the first clue that this was not a true breakout. It was a liquidity grab in progress, designed to collect stops sitting above the range before the real directional move would begin. I stayed completely patient during this phase. No entry, no hesitation, no emotional reaction. Just observation. The Silver Bullet Strategy demands precision timing inside a very specific window, and entering too early can destroy the entire concept. So I watched as price expanded slightly higher, swept the obvious highs, and then immediately started showing signs of rejection. The structure was shifting in real time, and I could feel the market preparing for displacement in the opposite direction. Then came the moment I was waiting for. A strong, impulsive candle appeared, breaking the short-term structure with clarity and speed. It was not a slow rotation or a weak pullback. It was aggressive, clean, and intentional. This was the displacement I needed to confirm that the liquidity above had been engineered and delivered. In ICT terms, this was the confirmation that the manipulation phase was complete and the market was now ready to move in its intended direction. At that point, everything slowed down mentally for me, even though the chart was moving fast. I was no longer guessing or reacting emotionally. I was executing based on a predefined model I had studied and tested. This was the exact condition I had been waiting for inside the silver bullet kill zone, and now the opportunity was finally presenting itself in real time on Metal Market Insight's live test session. The moment displacement confirmed itself, I shifted from observation mode into execution mode. There was no excitement, no hesitation, just a very calm focus, because this was exactly the type of structure I had been waiting for since the session began. Price had already swept liquidity above the equal highs, and now it was breaking structure with clear intent, which meant the probability had shifted in favor of continuation in the opposite direction. I marked my entry mentally first, not impulsively. The idea was simple: wait for a minor pullback into a fair value area after the displacement, and then execute with controlled risk. The market started to retrace slightly, almost as if it was offering a second chance to participate. This is where most traders either overthink or miss the move completely because they hesitate after seeing the initial aggression. But in ICT Silver Bullet logic, that retracement after displacement is often where the real entry lies. As price pulled back into the imbalance zone, I could see how cleanly the structure had formed. It was not random movement. It was a sequence. Liquidity grab, displacement, and now a retracement back into inefficiency. This alignment gave me confidence, not because I was predicting the market, but because I was reading what had already been delivered. The market had already shown its hand, and now it was simply offering execution. I entered the trade with controlled risk, fully aware that even a high probability setup can fail if not managed properly. The moment I was in, the emotional weight of live execution became real again. This is the part no one talks about in strategy breakdowns. The psychological pressure that comes after clicking buy or sell, but I stayed locked into structure, watching how price reacted around the level, rather than reacting to every small fluctuation. Almost immediately after entry, price started responding in my favor, not in a chaotic way, but in a structured, controlled expansion that suggested institutional participation. This was the point where I realized the silver bullet concept was not just about timing the market. It was about understanding the sequence of liquidity engineering that leads to predictable displacement. And as I watched the move begin to develop, I knew the real story of this trade was only just getting started. As price started expanding in my favor, the movement wasn't just smooth, it felt deliberate. Each candle seemed to build on the previous one, like the market was unfolding a planned sequence rather than reacting randomly. This is the part where most traders either panic and close too early or start doubting the setup entirely. But I stayed focused on structure, not emotion. The silver bullet logic was already in motion, and I just needed to let it play out. There was a small pullback that came right after the initial move, and I could immediately see how it was designed to test conviction. It didn't break structure, it didn't invalidate the idea, but it was enough to shake out weak hands. This is where experience matters more than theory, because on paper it looks like uncertainty, but in live markets it's often just continuation disguised as hesitation. I didn't move my stop or interfere with the trade. I let it breathe. That decision alone separates planned execution from emotional trading. The market dipped slightly, almost retesting the entry zone, and for a brief moment it felt like it could reverse. That moment of doubt is exactly where discipline is tested the most, but I reminded myself that liquidity had already been taken, structure had already shifted, and displacement had already confirmed direction. Then came the real confirmation. Price didn't just recover, it accelerated. The move out of the retracement zone was sharper, cleaner, and more confident than the initial push. This is something I've noticed repeatedly in ICT-based setups. Once the market finishes its internal testing phase, the real expansion often comes with more strength than the first impulse. At that point, I wasn't just watching a trade anymore. I was watching the full sequence of the silver bullet model unfold in real time. Liquidity grab, displacement, retracement, and expansion. Everything was aligning exactly the way the concept describes. And as I continued observing the move develop under Metal Market Insight's live testing framework, I realized this wasn't just about one trade anymore. It was about understanding how precision timing can completely change the way you see the market. As the expansion continued, the chart started to feel less like noise and more like a controlled delivery system. Price wasn't rushing randomly anymore. It was flowing in clean legs, respecting internal structure, and leaving behind clear inefficiencies as it moved. I could see how liquidity below the retracement zone was no longer relevant. The market had already shifted its focus upward, and now it was in full delivery mode. At this stage, I started managing the trade mentally rather than physically interfering with it. I wasn't looking for reasons to exit early. Instead, I was observing how far the market intended to run before it reached its next area of interest. This is where many traders lose consistency. They exit when they feel comfortable, not when the structure actually signals completion. I didn't want to make that mistake here. Another small consolidation formed mid-move, and I recognized it immediately as a continuation base rather than a reversal signal. The candles tightened, volume slowed slightly, and it looked like the market was preparing for another expansion leg. I stayed patient again, reminding myself that the silver bullet concept often delivers in phases, not one single straight line. Then the next leg hit. It was sharper than expected, almost like the market had been compressed and suddenly released. Price pushed through multiple short-term levels without hesitation, confirming that this was not a corrective move, but a full directional expansion. Watching it in real time reinforced something important. Once liquidity is properly engineered, the delivery phase can feel almost effortless. At that moment, I realized this trade was no longer just a test of strategy. It was a test of discipline, timing, and emotional control under live conditions. And as I continued tracking every movement closely under Metal Market Insight, I understood that the real edge wasn't just knowing the ICT Silver Bullet model, but being able to sit through its entire sequence without interfering with it prematurely. As price continued its expansion, I noticed something very important happening in real time. The momentum was starting to mature. It wasn't losing strength abruptly, but the candles were no longer as aggressive as the initial displacement. This is usually the stage where the market begins to distribute profits before any potential slowdown or reversal. and recognizing this phase is critical if you want to avoid giving back unrealized gains. I started mapping the nearest internal liquidity zones mentally, not because I planned to exit immediately, but because I needed to understand where the market might naturally react. In ICT terms, every move eventually seeks liquidity, and even strong expansions tend to pause or consolidate once they reach logical resting points. I wasn't trying to predict the exact top, I was just preparing myself for potential reactions. There was a brief moment where price stalled, forming a small range after the strong push. This pause felt different from the earlier consolidation. Earlier, it was accumulation before expansion. Now it felt like exhaustion after delivery. The difference is subtle on the chart, but in live trading it feels completely different in behavior and speed. I stayed observant, not reactive. Instead of closing the trade instantly, I adjusted my mindset to partial decision-making. I reminded myself that successful trading isn't about catching every tick of the move, but about capturing the majority of the structured expansion. If the market was still willing to extend further, I would stay in. If not, I was already mentally prepared to secure results and step back without hesitation. Then, almost as confirmation of what I was observing, price made another attempt upward, but it lacked the same conviction as before. The move was still bullish, but it felt lighter, less aggressive, and more hesitant compared to the earlier legs. That was the moment I knew the market was entering a decision phase. And whatever came next would define the final outcome of this silver bullet execution under Metal Market Insight's live test. As the final phase unfolded, price made one last push that looked strong on the surface, but underneath it carried a different energy. The candles were still bullish, yet the speed and conviction were no longer the same as the earlier displacement. It felt like the market was completing its intended delivery rather than initiating anything new. I stayed calm, watching how each candle reacted near the recent highs, knowing this was the most important moment for decision-making. Then came the shift. A sharp rejection appeared from the upper region, not chaotic, but structured enough to signal that liquidity on the upside had likely been exhausted for this session. The reaction wasn't immediate collapse, but a controlled slowdown followed by gradual pressure against the direction of the move. This is where experience matters most, because the market rarely announces its top in a dramatic way. It transitions quietly first. I finally decided to secure the trade, not out of fear, but out of recognition that the primary objective of the silver bullet setup had already been achieved. The move had delivered displacement, expansion, and structure alignment exactly as expected. Holding beyond this point would have turned a high-quality execution into a necessary risk. So I closed the position with clarity, not emotion. After exiting, I didn't rush away from the charts. I watched what the market did next. As expected, price entered a more unstable phase, losing directional clarity and beginning to rotate within a tighter range. This post-move behavior confirmed what I had just experienced. The trade wasn't luck, it was sequence-based market behavior unfolding exactly within the ICT framework I had tested. And as I sat back reflecting on the entire execution, one thing became extremely clear to me. The ICT Silver Bullet Strategy is not about predicting the market. It is about waiting for the market to reveal its intention through liquidity, displacement, and timing. When those three elements align, execution becomes simple, but only if discipline is maintained from start to finish. This entire live test, documented through Metal Market Insight, wasn't just about profit or loss. It was about understanding that the market is not random when viewed through the right lens. It is structured, timed, and engineered around liquidity. And once you truly see that, you stop trading emotions and start trading sequence.